Good morning and welcome back to Margin. This morning we're going to talk about 3 final components that are important to include in your financial snapshot. So let's jump right into it. Now that you've gone through the process of looking at those 6 key basics with regards to your financial snapshot, now it's going to be important to look at 3 additional components that are important to be mindful of at a minimum. So the first component of this comes down to credit. It's important for you to know what your credit score is and what your credit report actually shows, what it represents. And it's important to look at these aspects because many people don't check their credit score on a regular basis and don't check for key indicators like any kind of errors that they need to have corrected. And so they sit on there and they cause issues in your credit report. And if you're not actually looking at that, if you're not actually reviewing that on a regular basis, it can be an aspect that affects your ability to get a loan or to get an apartment or to get the best rates on your car insurance and other aspects as well. So looking at your credit score, you can break it down into 5 categories. And so the first category comes down to excellent or exceptional. Now, depending on the reporting agency, this will have a different range within there, but I'm just going to give you a general range that you can apply across the board. Now, with that, when you're looking at the excellent range, you're typically looking at a credit score that's over 800. When you're looking at the next category, which is very good, when you're looking at very good, you're typically looking at a range between 740 and 799. When you're looking at a good range, you're typically looking at 670 to 739. So beyond that, you may have a credit score in the fair range, which is 580 to 669, or in the poor range, which is basically 579 or below. And technically, you could actually have no credit score as well, but I didn't want to include that in this grouping of 5 different ranges. So with that, it's important to look at your credit score as well as your credit report on a regular basis. So there are 3 reporting agencies. One is TransUnion, one is Equifax, and one is Experian. So with that, you have those 3 reporting agencies that are reporting on your credit. And so you can also apply for an annual report that will give you the entirety of all 3 reports. And you also could go to your bank or jump online to your credit card company and actually pull your credit score with most accounts. So with that, you may want to consider looking at your credit card accounts or your bank account and whoever you bank with or whoever you have your credit card account with, and see if they provide that as a free service. Now, having an idea of where your credit score is, being able to maintain it well, and knowing what's on your credit report is actually an area that's pretty important for you to do. So that's why I added this as the first component above and beyond the basics around your financial snapshot. Now, the second component comes down to insurance. When I went through the financial snapshot, I didn't want to include that aspect, the insurance aspect, in that first grouping because it was ancillary to your finances, even though it can impact your finances pretty heavily. Now, with that, there are plenty of different aspects of insurances that you should consider having. So insurance can have a significant impact on your finances. For example, medical bills are actually the leading cause of bankruptcy here in America. And so with that, the first item that you want to make sure that you're not underinsured in or not insured in at all has to do with your health insurance. Health insurance, dental, vision, these are important components to make sure that you have proper coverage in. Now, I did a separate episode that went into the specifics around health coverage, different options related to that depending on your budget. And so you can refer back to that, but it's really important to have health insurance as a component within your financial snapshot. So the second component comes down to homeowners or renters insurance. Now, if you have a mortgage on your property, on your primary residence or on your rental properties, you will be required to provide that insurance. And that protects the mortgage holder, the actual company who holds your mortgage, in the event of a flood, a fire, or an act of God of some other kind. So with that, you'll be required to have that homeowner's insurance. So what you want to make sure is that you have the proper coverage for that property. On the other side, if you end up renting and you have an apartment or a house that you rent, oftentimes now those agencies, those companies are requiring some kind of renter's insurance. This protects them in the event that your unit is broken into, or if there is some other aspect that is not covered by their general liability policy. And so you'll want to have that in place to cover the contents of your apartment in the event of a fire, a flood, those types of things. And so be mindful of having that in place, and actually being mindful of looking at the contents that you have, documenting what those are, so that if that ever were to happen, that you have the information necessary to pass off to the insurance company. Now, the next component comes down to auto insurance. Now, if you have a loan on your vehicle, this will be required by the holder of your auto loan. But otherwise, you want to make sure that you have full coverage or liability coverage on your automobile, on your vehicle, in the event of it being stolen or you getting into a car accident of some kind. But actually having that level of protection for you is going to be important. So the next component comes down to short-term or long-term disability. So your employer may provide short-term disability, but typically they don't offer long-term disability. Now, this would be basically covering a certain percentage of your income in the event that you are disabled for a longer period of time. Now, this also covers you in case you burn through your emergency fund and will give you some supplemental income. So look into those. That will be important to just shore up and protect you in the event of some kind of disability, some kind of injury that is outside of a workers' comp type of claim. So the next component comes down to long-term care, which is age-specific for those who are technically over the hill. This protects your family, your loved ones, from the expenses of having additional care provided to you in the event that you need it prematurely. So the last component comes down to actually having a subscription, a policy on identity theft. Now, this has become a huge issue, and so you want to be mindful of how to protect yourself against being a target of identity theft. And so having that in place, having someone else monitoring that, and hopefully shielding some of that risk will be important. So the third component comes down to legacy. Now, I put this into the financial snapshot because it, again, affects your finances. Now, the reason why I put legacy in this is that so many people die without a will. So what I really want to encourage you to do is look into getting a will in place, even if you don't have a great deal of assets. This will protect your family, will ensure that the aspects that you care about are carried out in a proper manner, that your family knows what your requests are in regards to your assets and in regards to what you want going to whom and when and for what purpose and so on and so forth. So having a will in place is very inexpensive. You can go through a process of using an online site to formulate and authenticate, but you want to go through that process because it's going to be especially important for you to have that stored so that those who are dealing with your passing don't have yet another thing to try to sort out. So another insurance policy that I would consider, depending on your net worth, would come down to an umbrella policy. If you own a home, for example, and you have a homeowner's policy, it will cover you up to a certain extent, up to a certain point. So if you, God forbid, have someone who visits your home, slips and falls, and ends up needing some kind of hip surgery or something like that, this covers you above and beyond your house policy, your homeowner's policy, to cover those types of incidents. So my call to action today really comes down to looking at these 3 additional areas of your financial snapshot, looking at any that apply to you that you need to shore up, that you need to be mindful of, especially now that you have a score based on your primary core aspects around your financial snapshot. If this information is helpful to you, please do like, subscribe, and hit the notification bell so you're reminded to come back on a daily basis and improve in managing your personal finances. Thank you for your time. Enjoy your day. We'll see you back here tomorrow.